Hi, this is the Keiser Report. I'm Max Keiser. $71 million raised in the Hope for Haiti telethon from Hollywood celebrities. Jennifer Aniston herself kicked in $500,000. My question is, what about Hope for America? That sounds like a good campaign. Hope for America. You know, 45,000 people died last year in America because they don't have any health care. Because the pharmaceutical industry and the Wall Street suicide bankers are blocking health care reform, especially in places like Mississippi. Mississippi, where the average infant mortality rate is similar to the most impoverished countries in the world. But wait, Mississippi, there's hope. Hope is on the way, Mississippi. James Miller, Managing Director of Oxford International Development Group, is working with Marie Shirley, a health campaigner in Mississippi. They've converted a deserted shopping center into a medical mall for the poor. Now, where did Miller and Shirley get this idea? From 5 doctors brought in from Shiraz University. They've created the Mississippi Islamic Republic of Iran Health Project in Mississippi. That's right. Doctors from Iran have been called in to Mississippi to help the people in Mississippi get decent health care. Now, they're teaching the Americans about health care based on the Iranian model of health houses that have cut infant mortality by 2/3. Shirley has visited Iran in May. She was astonished. She was welcomed with open arms. When she went to remote villages to see the health houses, the Iranians were equally amazed. Quote, not only were Americans coming here, but also they were learning from us rather than telling us what to do, said a local Iranian. Now, maybe Jennifer Aniston should go to Iran, learn how the Iranian people are able to provide basic health care for their people, and then she can go back to Hollywood and have a magnificent Hope for America telethon, raise some money for Americans. Please, Hollywood celebrities, help Americans. Okay, let's get the political updates right now from Stacy Herbert. Stacy, welcome back.
Max, I have some campaigns in the news. The first one is in the United Kingdom, and the headline reads, Save Our Savers Group seeks fair deal for prudent customers. So this is a group of savers, and they're saying that the government over the past few decades have been attacking savers with low interest rates and policies that incentivize speculation.
That's true.
I know this is one of your favorite topics.
Absolutely true. Savers have been victimized by the speculators who have coerced government into allowing the speculator class in America and around the world to keep interest rates artificially low to make it easier to speculate. And then when they make bad bets, they coerce the government or, in some cases, actually extort the government to bail them out. So the savers are the ones who are subsidizing the speculators. People are trying to live on pension money. People are trying to have some retirement funds available. They're the people who are underwriting all of Goldman Sachs' bonuses. Effectively, all the $140 billion in bonuses on Wall Street this year came out of the pocket of savers, pension funds, retirees, and savers. Purely, kill it.
And the group notes that at the same time, the government has championed public and individual spending as our only way out of recession. Now, Reverend John Strain, who is one of the founders of this group, says anyone would think that the government doesn't want people to provide for themselves, doesn't need enterprise built upon the nation's savings, and would rather we all borrowed and spent our way into old age dependency.
Well, you know, there is no borrowing left. You see, in 2007, Stacy Herbert, and this is important for people around the world to understand, in 2007, the debt compilation that was the hallmark of the global economy for 30 years came to a crashing and abrupt halt. We are now in a period of deflation or unwinding. Simply by trying to throw more borrowed money into the situation, you're simply exacerbating the problem. And these policymakers in Washington have no idea really what they're doing. They're only, throwing gasoline out of the flame of the bonfire of global vanities on Wall Street, City of London, elsewhere. It's preposterous.
Now, there's another campaign in America, and this was formed in 2009, and it was ostensibly to deal with the other side of the equation, which is government spending. And this is the Tea Party group. So the headline reads, Tea Party disputes take toll on convention. So later this week, there's a Tea Party Nation meeting in Nashville. And now this is the motto of the Tea Party Nation. Here's from their website. Tea Party Nation, or TPN, is a user-driven group of like-minded people who desire our God-given individual freedoms, which were written out by the Founding Fathers. We believe in limited government, free speech, the Second Amendment, our military, secure borders, and our country.
Well, these Tea Parties need to get spanked. I think they should line them up end to end, buttocks to buttocks, and they should form some kind of global spanking committee from countries that are fed up with these, venal, egotistical, American financial, consumeraholic knuckleheads, and just go on this mad paddling spree and they need a good spanking.
Well, the reason why there's controversy around this is that it was the Tea Party group. Many of the members think that they're part of a grassroots organization, and some people think they've joined a grassroots organization. But apparently, according to the founders of Tea Party Nation, they're actually a for-profit situation, and they're charging $549 plus a $9.95 handling fee for this event, and they're paying Sarah Palin $100,000 to speak at the event. Now, Eric Erickson, who is the editor of RedState.com, a very popular right-wing or conservative website, called it scammy. If you look at the schedule for this week, they have all sorts of, their meetings are around organizing tea parties, forming youth groups, and voter registration drives. The very same thing that many people from the right, and this, by the way, these Tea Parties they're like supporting Republican candidates, and their aim is to take over the Republican Party. So they are for big government when it applies to the Republican Party. Remember, George Bush expanded the federal government more than almost any other president before him. He doubled the national debt, and he expanded the military expense so much. And yet they're for that.
Sarah Palin should be on Home Shopping Network. She should be selling those little bracelet and trinkets and doing those types of things. And the idea of their grassroots effort in the United States attached to some successful political movement is absurd, because anything that's really grassroots in America is immediately consigned as a threat using anti-terror laws. In other words, anything free speech is a threat using anti-terror laws. Anything that's actually instrumental in promoting egalitarianism or democracy is attacked with anti-terror laws. So you're not going to find any grassroots movement in America anymore. Even the Olympics, which was that bastion of amateurism, has now gone pro. You don't really find anything anymore that's genuine. And the whole notion of Tea Parties, by the way, harkens back, of course, to the Boston Tea Party, part of the American Revolution, and the idea of no taxation without representation. And those founding fathers in America are rolling in their grave, that these people have co-opted that phrase to serve their own selfish interests, have nothing to do with democracy, as that's iterated in the documents founding that country.
Well, their very own statement says that they support the military, and the military is responsible for much of the U.S. deficit. Remember, it takes up well over half of the U.S. Government revenue. So it itself is a cause of the deficit.
Yeah, there's mercenaries.
And the next headline, Obama to seek spending freeze to trim deficits. This is in response to all the right-wing attacks. He's trying to cut the deficit by slashing discretionary spending, which is domestic spending on poor people, stimulus programs, whatever.
Yeah.
But he's excluding the military and aid to Israel from this.
What?
So
Israel's excluded again?
Well, because they have powerful lobbyists, but the people themselves in America have no lobbyists operating on their behalf.
That's true. Jennifer Aniston should raise, and George Clooney should raise $75 million to hire lobbyists to go to Washington to lobby for their own interests. What are they wasting it in these international campaigns when, they're not wasting it. Let me correct myself. But they're blind to the crisis in their own state, in their own country. It seems remarkable to me. If they can raise $75 million, think of all the lobbyists you're going to hire for that money. Think of all the political traction you can get in Washington. That's a lot of money. You can hire hundreds and hundreds of lobbyists for years to promote your interest, the interest of the people.
Now, going back to the UK, we have this headline, UK economy lies on bed of nitroglycerin.
Ooh, a bed of nitroglycerin?
Top financer says,
Woo!
Bill Gross warned his investors. Bill Gross?
Who's Bill Gross?
He's the head of PIMCO, which is the largest bond trader in the world.
Oh, yeah.
He says this, quote, "The UK is a must to avoid. Its gilts are resting on a bed of nitroglycerin. High debt with the potential to devalue its currency present high risk for bond investors."
Oh, that's true. Oh, I've done the research on this one. The British pound looks, as they say on Wall Street, heavy. Meaning, look out below!
Banks must raise billions to fend off crisis, says IMF. So
yes.
The IMF is forecasting a further meltdown in the banking system, and they're saying that banks need to raise more money in order to avoid this meltdown. Now, twofold. Either he's seeing a meltdown coming, which will then, again, penalize savers, and on the other side of the equation is we're hearing all the time about small businesses and individuals who are unable to get any credit from the banks.
He's smoking his own belly button lint. Move on, the next story.
From Oliver Stone, bankers helped Hitler. Adolf Hitler was aided in his rise to power by Western bankers who appreciated his tough line on communist agitators and worker power.
Well, it's no secret that corporations in the U.S. like Coca-Cola, of course, created the Nazi beverage Fanta, Orange Fanta, which was for Nazis. IBM was responsible for all the calculation of all the serial numbers that was used to tag the prisoners that ended up in the concentration camp. So American J.P. Morgan was playing both sides of the war at that time. Just like J.P. Morgan and Goldman Sachs play both sides of the war today. They're financing the mercenaries and the terrorists in various countries, just like they're financing the bonuses on Wall Street. They're arbitrageurs. They have no sovereignty. They have no country of which they're affiliated with. They're amoral. They're just eunuchs plowing through the cyberspace of money, looking for, like a sloth, looking like a slug, looking for salt. They're not even human.
Well, speaking of eunuchs, my final headline takes me to Timothy Geithner. Goldman parachute awaits Geithner to ease fall. So it's looking more and more, or at least, the gossip in the Beltway is that Timothy Geithner might be canned because of his involvement in this AIG bailout. And now the Bloomberg News is suggesting that perhaps he could be going to Goldman Sachs.
Duh! What a total, conflicted nightmare. It's like Argentina over there in the U.S. Okay, Stacy Herbert, thanks for being on the Keiser Report.
Thank you, Max.
All right, don't go away. When I come back, I'm going to be talking to Barry Ritholtz, author of Bailout Nation.
Kidnappings can happen at any time.
They're armed and dangerous, but they're not soldiers. Get down!
We work for the government to help Afghanistan rebuild.
They're at war, but they're not the army. So who are they?
Our client is the American people.
Private armies on RT. Every month we give you the future. We help you understand how we'll get there and what tomorrow will bring. The best in science and technology from across Russia and around the world. Join us for Technology Update on RT.
All right, welcome back to the Keiser Report. Barry Ritholtz is the author of Bailout Nation. He's also the CEO and Director of Equity Research at Fusion IQ. Barry, welcome to the show.
Thanks for having me, Max.
All right, now, Barry, Barack Obama just gave his State of the Union address. But I want you, Barry Ritholtz, what is your state of the economy?
Well, we find ourselves in a not unusual situation after a massive credit crisis and a collapse on Wall Street, a faltering in the housing market, an absolute freeze in the economy. That 6 months of hell that everyone endured from when Lehman did its infamous face plant in the concrete to the bottom in March, that's 6 or 7 months, that period of hell is over, and now we're in a purgatory. It's not a V-shaped recovery. Things are not much, much better. Some things are actually still getting worse, as the housing data in the United States shows. It's just that it's getting worse much more slowly, and we seem to be reaching a sort of bottom plateau, some degree of stability. The big difference here in New York and elsewhere I've been in the United States, after 7 months of hell, purgatory doesn't feel too bad.
All right, so it's not a V-shaped recovery. It's not an L-shaped recovery. It's more like a, I don't know what letter that would be. That would be kind of like...
I hate the letter. By the way, let me interrupt you. The letter discussion is for idiots and TV pundits. This is a complex, sophisticated economy with a lot of moving parts. Shortening it to a bumper sticker or a single letter is an exercise in Orwellian dumbing down the debate to just one letter, and I don't participate in that.
I hate those TV pundits who use these letters to describe what's really happening in the economy. We should banish all of them. They're terrible.
I got a letter. I got 2 letters for them, and it's F you. Come on, people aren't that stupid. You could talk to us like we're adults. Try not to dumb everything down to the point of absurdity.
All right, let's play a little word association. I'm going to mention some names.
Sure.
And you tell, I'm going to mention some names. You tell me the first words that pop into your mind, okay? As it relates to the economy. President Barack Obama.
Disappointing. Should have spent more time re-regulating Wall Street.
Economic advisor Paul Volcker.
He's the man. It's about time Obama started listening to him.
Director of National Economic Council Larry Summers.
Should never have been there in the first place. This guy just fails upward. Thank goodness he's running out of upward to fail to.
Treasury Secretary Tim Geithner.
Dead man walking.
Fed Chairman Ben Bernanke.
Better than Greenspan.
How so?
But that's not saying a whole lot.
Yeah? How so?
Well, Greenspan seemed to want, didn't realize the impact that always responding to what the market wanted would have. Bernanke seems to understand that sometimes you have to think out of the box. Sometimes you have to do things that the market isn't going to be happy about.
Okay, now, during Greenspan's time, he would often telegraph the intentions of the Fed before the Fed took action. He would let Wall Street and traders know kind of where they were going. And Bernanke seems to have continued that tradition. And it seems completely,
that's right.
It goes against what we would think a Federal Reserve banking chairman should do, which is kind of keep the traders on their toes and keep them guessing. How does that, how do you weigh in on that? Should the Fed telegraph their moves, or should they try to keep them guessing?
You know, you don't want to shock the market. I mean, it's got to be a balance. On the one hand, the Fed can't be Wall Street's bitch. It can't be the market's, what should I do now, sir? On the other hand, you don't want to suddenly say, hey, rates were 0 last week, but today, and we're going to get an announcement from the Fed shortly, today we're going to see rates at 3%. You don't want to stun them. You have to have an arm's distance. You have to respect what the market is doing and the influence it has, but not kowtow to it.
Okay, well, one of the biggest terms, if you will, that have popped up over the past 10 years and growing in strength every year is this term moral hazard. In other words, the banks on Wall Street, when they make a mistake, they're getting bailed out. The title of your book is Bailout Nation. So, in other words, there's not a commensurate amount of risk involved when these bets are made on Wall Street as compared to the reward. They're making these outrageous risks, and they're getting outrageous rewards, and they are they're not being penalized at all. So, your Bailout Nation, it would seem to belie this notion. You're the author of this book, and the Fed at least has an ability to introduce some risk into the equation, by maybe keeping the Fed on their toes. Anyway, that's my point. Let me move on here.
Max, before you go beyond that, I want to just point out, when you talk about Wall Street, there are two different groups. There are the publicly traded companies and then the private partnerships. You will notice that none of the private partnerships blew up, took down the economy, required a bailout, because the legal structure is such that if a private partnership finds itself deeply in debt, not only do the creditors go after the partnership, but they're capable of going after each individual partner, meaning they'll take the house, the car, the boat, the Rolex, the retirement account, and isn't it a surprise that those guys didn't engage in such reckless speculation that they destroyed their own companies and the economy, but the publicly traded companies, it was a case of heads I win, tails you lose. Hey, let's take this big gamble. If it pays off, we'll all make lots of bonuses. And if it doesn't, hey, it's only the shareholders' money and eventually the taxpayers' money.
Yeah, but you're talking about private partnerships. You're talking about listed Wall Street banks. You're talking about the Fed. Isn't there a lot of kind of back-end balance sheet smoothing going on? For example, what I'm saying here is that in the area of credit default swaps and other types of derivative trading, you talk about the fact that these private partnerships, I realize I'm sensitive to the fact that you're involved in a private partnership, so I'm not saying that you're involved in the way that I'm suggesting.
No, I'm not involved in a private partnership. I'm not like, I mean firms like, actually one of them just went to public, Lazard Frères, Brown Brothers Harriman, firms like that, big Wall Street historical firms that aren't publicly traded. I don't mean private partnerships like three guys in a room. We're 15, 20 guys in my firm. I'm talking about big, powerful, but not publicly traded companies. They managed to steer clear of this, not because they weren't attracted to the profits, but they were cognizant of the risk and weren't putting their own personal fortunes on the block, whereas the publicly traded companies said, the hell with it, it's just the shareholders' money.
Is Goldman Sachs going to go private again?
Well, that's the chatter. I don't know if it'll happen. I'm not privy to any of their information. I think once they're private, they matter less to the overall economy, less as a potential bailoutee. They just become another creditor of, people like AIG and other players on Wall Street. It certainly creates less incentive for the government to have to rescue them. They don't have the same needs. They don't have the same bondholders. Most people don't realize a lot of these bailouts, the big recipients of the bailouts were the bondholders who otherwise would have been wiped out. If you look at Bear Stearns, they got 100 cents on the dollar. If you look at a lot of other people, they got paid much more than they would have if these firms would have gone the normal route of liquidation, the way Lehman did. The bondholders in Lehman got literally pennies on the dollar.
Geithner says that the AIG bailout saved the economy and not individual banks. Is he lying?
That's total. That's just nonsense. When you are engaging with a counterparty, when you are taking risk with who you're doing business with, you have no expectation that the taxpayer is going to back you up. You have two institutions at AIG. You have the regulated insurance company, which was 65,000 employees around the world, and then you have AIG Financial Products, which is 390 people in New York. That's a highly leveraged, unregulated hedge fund hiding in the skirts of AIG. What they could have done was very easily taken the insurance company, spun it out separately, and then wound down FP like a rogue. Picture going to Las Vegas and shooting craps in the alleyway with a bunch of thugs. And when you lose your money, you go to the state gambling commission and say, hey, these guys didn't pay me what they were supposed to. You're not dealing with the insurance company. You're dealing with a hedge fund. You should not expect to be made whole. It's absolutely unconscionable that these counterparties were made whole. And it's more than people realize, because the month before AIG flopped, but before they actually should have filed for bankruptcy, a lot more money passed through because firms like SocGen and Goldman Sachs said, hey, if you don't make good on these securities, we're just not going to do any more business with you. So there's another $20 billion or so that worked its way through AIG that we have yet to hear a full accounting of.
How about the Volcker plan? Is it real? Will it work? Will big banks be able to stand on their own 2 feet for the next crisis, or are we still a bailout nation?
The Volcker plan is essentially a plan to bring back boring banking. Banks shouldn't be exciting. These guys should be dull. They should borrow money from the Fed at 2%, lend it out at 6%, and be on the golf course at 4 o'clock. They used to call banking 246 banking for those reasons. Borrow cheap, lend dear, and be out on the golf course shortly thereafter. That's a step in the right direction. And we've already heard from Mervyn King, who agrees with Volcker, who said these banks should not be speculative, especially when the government is insuring the deposits. If the taxpayer's on the line for this, the taxpayer has the ability to say, you're not a hedge fund, and if you want to be a hedge fund, we can't insure the deposits for you anymore. It's perfectly reasonable. Unfortunately, Congress is owned by the banks, so it's very difficult to get anything through.
You've been appointed by Obama. What would you say? What would you need to pass to start to right the ship?
Well, I would give him 5 or 10 bullet points and say, here's what caused the crisis, and go straight down the list. Really low, ultra low rates by the Fed. We need to do something so that they only do that in emergency and only temporarily. Number 2, we used to have commercial banks which took deposits and paid that were insured by the FDIC, and investment houses. They used to be separate thanks to Glass-Steagall. The whole idea behind Glass-Steagall was when Wall Street has one of its regular convulsions that comes along every 10 years or so, it's sequestered and stays on Wall Street. When the 1987 market crash took place, it didn't spill over to the economy. You could still get a mortgage or a credit card or buy a car. The whole credit market didn't seize up. It worked really well, Glass-Steagall, for 70 years, and we took it down just in time for the crisis. That's number 2.
All right, Barry, I'm going to have to cut you off there. We've run out of time. But, your point number 1 about interest rates, I think I would agree, that is the single most salient point. Rates are much too low. It helps the speculators, penalizes the savers. But Barry Ritholtz, author of Bailout Nation, thanks for being on the Keiser Report.
Thanks for having me, Max.
All right, that's going to do it for now. I want to thank my guests, Stacy Herbert and Barry Ritholtz. And if you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying, bye, y'all.